Tax day is here, so what better day to reflect on our tax system? The system by which we pay for civilized society, as US Supreme Court Justice Oliver Wendell Holmes said nearly 100 years ago. So, with that in mind, here are five things you should know about Oregon's tax system. Number one, the tax system pays for the things that matter to Oregonians. Taxes are essential for our communities to thrive. Taxes pay for the schools that educate our children, for the roads and bridges we travel on, for much of the healthcare that keeps us alive and healthy, and for many other services that we alone cannot provide for ourselves. In Oregon, there's no more consequential tax than the personal income tax, the taxes that we pay out of our earnings. The personal income tax brings in about two-thirds of all the revenue that goes to pay for the Oregon General Fund. What people usually mean when they say the state budget. And nearly 90% of the state budget goes to pay for just three things: education, health and human services, and public safety. These three things are essential to the well being of Oregonians. And that's a lot of what our taxes pay for. Number two, Oregon's personal income tax is mildly progressive, but the entire tax system is not. From Jesus to Adam Smith, it has long been recognized that a fair tax system is one that is based on ability to pay, one that asks proportionally more of the rich person than of the poor person. Oregon's tax system is progressive, but only mildly so. What we're looking at here are Oregon's personal income tax brackets, paired with the income that puts you in those tax brackets. And to keep it simple, we're seeing the income levels for joint filers, for couples that file taxes together. As you can see here, tax rates start at 4.75% and top out at 9.9%. Take a look at the second to highest tax bracket, the 8.75% tax bracket. That tax rate kicks in at 21,500 of taxable income, and it stretches all the way to 250,000 of taxable income. So this means that a lower income family with just $25,000 of taxable income pays the same tax rate on its last dollar of income as a family making $250,000. So again, here in Oregon, we have a progressive income tax system, but one that is only mildly progressive. And of course, Oregonians don't just pay the personal income tax. We pay a number of other taxes like property taxes, excise taxes like alcohol and gasoline and tobacco taxes, and other taxes that are not based on ability to pay. So, what does our tax system look like when you add up all of the taxes that Oregonians actually pay? This is what it looks like. As you can see here, the group that pays the highest share of their income towards taxes is the lowest earning, the poorest 20% of Oregonians. This group, on average, pays about 12% of their total income towards taxes. That's more than the richest Oregonians, the richest 1%. On average, the richest Oregonians pay about 10.4% of their income in taxes. So, what we have here in Oregon, as is the case in just about every state across the country, is a state tax system that is upside down, that is regressive, that it asks proportionally more of the poor than of the rich. Number three, when it comes to raising taxes, the minority rules. Here in Oregon, if the legislature wants to cut taxes, a simple majority vote is enough to get it done. And if lawmakers want to create a new tax break for the richer corporations, again, a simple majority is sufficient. But if you want to raise taxes on the rich and big corporations to fund schools and other essential services, then you need a 3/5 vote by each chamber of the legislature. A simple majority is not enough to get it done. What this means is that a minority of lawmakers, a minority more easily captured by special interests, can block the will of the majority. Or to put it succinctly, when it comes to tax policy, the minority rules. Number four, corporations hide profits overseas to avoid taxes, but that can be fixed. To avoid paying taxes, multinational corporations artificially shift billions in profits earned in the US and Oregon to places that levy little or no corporate income taxes. When big corporations avoid taxes, it means that either there are fewer resources for schools and other essential services, or that someone else, families and small businesses, foot the bill through higher taxes. Oregon can prevent multinational corporations from benefiting from this practice of artificially shifting profits overseas. And at the same time, we can level the playing field for Oregon businesses by enacting a policy known as worldwide combined reporting. Worldwide combined reporting would raise an additional 230 million each budget period here in Oregon, funds that we could use to better fund our schools, healthcare services, and other vital services. And the beauty is that nearly all of this money would be paid for by rich investors and foreign investors. That is a policy that makes a whole lot of sense for our state. Number five, the tax system is a tool for improving economic security. One of the most important anti poverty programs is carried out through the tax code. That program is the Earned Income Tax Credit. Both the federal government and Oregon provide an earned income tax credit. The Oregon EITC is calculated as a percent of the federal credit. It's either 9 or 12% of the federal credit, depending on the child's age. There's tons of research showing that tax credits such as the EITC improve child health, boost school performance, promote college enrollment, and increase earnings when children become adults. Oregon can make its earned income tax credit more effective by increasing the amount of the credit and extending it to categories of workers arbitrarily excluded from the benefits of this valuable credit. So, in sum, our tax system plays a vital role in our lives, and it's up to us to push for the changes that are needed to make it work better for everyone.